Hello and welcome to this special episode of Deal Makers, where we put the spotlight on the hottest sector in the deal street, e-commerce. As bricks give way to clicks, big money is chasing 1 billion consumers going online. From the high and mighty of corporate India to the most marquee VC funds, everyone is queuing up to get a share of the e-commerce pie. Is this a bubble waiting to burst, or has India finally taken note of Internet Inc.? To discuss that, we have with us a panel of guests who are right there in the thick of the action. We have with us founder of Naukri.com, Sanjeev Bikchandani, also an investor in e-commerce companies, Renuka Ramnath of Multiples, who has made investments in the sector, and investment banker turned startup in e-commerce space, Falguni Nayar, is right here with me. Starting with you, Falguni. Investment banking, and then you left that for a lucrative business in e-commerce. How lucrative is it right now, and what are the prospects that you see?
I think e-commerce is showing, and it's already taken off, but it's showing signs of really becoming pretty mainstream as way of retailing in India also. Right now, the share of e-commerce in total retailing is very small, but the way things are going in China, in the US, it's bound to grow, and consumers are already embracing online shopping. So with that, it clearly feels like a sector that's going to really grow. And like you said, a bubble, but someone recently, when I said, oh, bubble is not a good word, they said, but not all bubbles burst. So let's hope this bubble doesn't burst.
All right, we're hoping that this bubble doesn't burst, but bubble nonetheless, you mentioned. But let me go to Sanjeev. Sanjeev, don't feel left out. We are women are in a majority over here on this panel. But then you have your skin in the business. You've been founder of a company which is in the listed space, and you have also invested in companies like Zomato. Though I would differentiate here between the e-tailers as well as the search engines. So you're more or less present more in that particular category. Do you think with the kind of fundraising that we are seeing in this sector, is the valuation really rich at this point?
So I think a couple of things. Let's distinguish between e-commerce and other internet businesses. And as far as valuations are concerned, look, there's one difference between what is happening now and what happened, say, 14 years ago in the year 2000. At that time, India had only 4 million internet users. Today, we're talking about maybe 250, 300 million and growing at a rapid clip. So I think the market is real, the base is substantial, business is happening. Yes, you may argue that valuations are have gotten a little ahead of themselves, but given the growth that's happening, I think companies will grow into those valuations. The risk, however, is that, look, not every company will succeed, as every early stage investor knows that, look, some succeed, some don't. It is from an investor's perspective, you've got to pick your companies.
All right, you need to pick your companies. Let me go to the investor now. Renuka, now your company, your fund has invested in delivery, but it's an enabler company. Was that a conscious decision to invest in an enabler e-commerce rather than a frontline e-commerce company?
Well, of course, it's a conscious decision to invest in an enabler rather than in a frontline company. But I do believe that there are some very interesting frontline companies that are emerging. The names are very well known. I don't have to repeat them. Given the stage of Multiples, given that it is investing out of its first fund, we have certain constraints in terms of our risk appetite, and therefore, while I was very keen to play the e-commerce market, I found it from a risk return perspective little more acceptable to play the enabler space.
But do you not think that the valuations, as far as that particular space is concerned, is considerably lower than the actual valuations that are right now in the frontline e-commerce companies?
Well, Nisha, my point of view on valuations about Indian companies, not now, for the last 15 years has been that there is nothing cheap in India, ever. Whereas in an enabler, you at the unit level can actually establish when you will become profitable, even if you are not profitable now. What's the capacity utilization, how much it has to increase before you become profitable at a unit level. And you are able to factor that in your spreadsheet in a manner of speaking. And that's something that we were more comfortable to assume as a risk now rather than in a frontline company. But even for that, the valuations are pretty rich.
So Falguni, Renuka said it as an investor that the valuations are rich. Nothing is cheap in India. How do you ascertain these valuations? And you've been an iBanker. What are the kind of multiples that we are talking about, and are these valuations sustainable?
Yeah, like Renuka said, I think currently the e-commerce companies are being valued at multiple to forward sales, and I think that's quite done in the past, even for brands. When you have a brand and you wanted to acquire a brand, I have seen a lot of consumer companies pay 2 times, 3 times sales to acquire a brand. They go up maybe even to 5 times sales. So I think clearly e-commerce companies are building a brand, like we clearly heard Renuka also say that. And it's all about customer acquisition, being there for your customer, having customer retention, and building a brand that will have a long-term value. And within a short span, I even saw how quickly Nykaa has been established as a brand. So the opportunity is very unique. And that's what investors are valuing. The problem is that right now the e-commerce companies are not profitable on the unit economics, like Renuka said. And with that, then the valuation looks very, very rich, because the sales are not translating to profits that it should translate to.
So Sanjeev, coming to you, you built many brands. Now, of course, Naukri.com, 99 Acres, Jeevan Sathi Shiksha, your investments in Zomato, all these are names and these are brands. Is that what you're playing on at this moment? And how important is profits at this point for an online and e-commerce company?
Well, yes, for us, we are focused on the consumer internet sector, so we invest behind good brands, good people, good brands, good ideas, solving unsolved problems. Now, having said that, we traditionally, our DNA is fairly conservative, and we like to believe we are capital efficient. Of course, in this environment, given the competitive situation that 99 Acres is facing, or Zomato's ambitions, and the fund availability, which is now much, much more than it was 17 years ago when Naukri started, we can afford to change that DNA a bit, and which we have done and are doing. But Naukri continues to be a 50% EBITDA margin business, and throws up a lot of cash, which we invest in our other businesses. But I'd like to make one point about e-commerce. There have been a lot of headline-grabbing sort of things, but roughly 70 to 80% of the capital that e-commerce has raised, maybe even 90%, has just gone into 2 companies, maybe 3 companies. I think it's important not to lose sight of that. That look, while 300 e-commerce companies started in the first wave, ultimately, people couldn't raise the second rounds, large numbers of them. Some could not raise the third rounds, and so on. So the mortality rate has been fairly high. And now a second wave is coming. And I think people are a little wiser, but still I would say most of the capital has gone into 2, maybe 3 companies.
You are correctly pointed out, Sanjeev. In fact, Flipkart, Snapdeal, Zomato is also in the process of raising funds, and they are done in very quick succession. So my quick question, counter question to you would be that in very quick successions, how is it that within a few months, the valuations are jumping up many-fold in these sectors? Of course, though in only a few of them.
Well, I think, people are picking their companies. India is currently, very popular with investors. Internet is very popular with investors. So India Internet is doubly popular. And therefore, as people pick their companies, the one that look like they will win or will become very large, whether it's a Flipkart or a Snapdeal or a Zomato, which has global ambitions and an increasingly global footprint, I think investors are liking those stories.
Sanjeev made an important point, and we'll take a short break and we will come back with what's going to separate the men from the boys in the e-commerce space and how long will this growth momentum sustain. Stay tuned for this very interesting discussion. Welcome back. You're watching Deal Makers and we are discussing the hot sector of e-commerce. And let me go back to Sanjeev. Then Sanjeev, you made a very interesting point that there are some and only a few who are commanding the high valuations, even though the perception is that the overall e-commerce space is growing at this point. What is it that will separate the men from the boys, and what is the kind of business model which looks like is going to sustain in the long run?
So I think, there are 3 crucial success factors according to us. 1 is talent, 2 is execution, and 3 is access to capital. If you've got these 3 things going for you, you'll have a very good chance of succeeding. Now, having said that, I'm assuming you've got a viable business model, that the unit economics is right, or at least will become right sooner rather than later. And the more capital you have, the longer you can wait for your unit economics to be right. But sooner or later, you have to get it right.
Falguni, come in on this. When you chose the cosmetics business as the retail business, it's a very niche area. What were the various decisions that went behind this particular commitment of yours into a business which is driven only towards a certain category of consumers?
I think in the industry, there are a couple of very important parameters. We all are looking at building a brand, acquiring the customer, and there is a certain cost of customer acquisition in the digital world. So given that cost of customer acquisition, what you need to do is you need to recover those costs as soon as you can through the average ticket size, the margin structure, and also how often you're able to get the customer back to buy with you. So what appealed to me was the balance between the margin structure that this industry enjoys, as well as the repeat purchase behavior that this sector can see. In beauty and wellness, so typically our customers can buy with us 5-6 times a year also.
So Sanjeev, let me come to you. Even though you are present mostly in the search engine side of the online businesses, the e-commerce business, what do you think are the growth drivers for the sector to perform well going forwards? Is it customer and only customer service that they provide in the end?
So I think, first of all, the big question is what is the size of the market you're chasing and how large will it become, say, 3 or 4 or 5 years from now? That will straight away tell you whether there's potential or not. The second is, what's the competitive structure like? Are you solving an unsolved problems? Are there any efficiencies you're providing which offline does not provide? Now let's take a look at Falguni's business. You said you call it a niche business, but actually the beauty products industry in India is huge. It's several thousand crores. Secondly, it's a vanity product. It's a beauty product. There's a lot of brand trust, faith here. And therefore margins can be very, very high. So large market, high margins, providing definite value and benefit to consumers, I think there is huge potential. So I think from all these sort of criteria, I think this Falguni's business idea checks all the boxes.
And Renuka, how much growth are you foreseeing in this particular sector as an investor?
I think e-commerce will grow consistent with what has happened with the rest of the world. And I also think that given that India is a young country, our demographic profile is a lot younger than the developed world, and given our mobile penetration being so high and mobile emerging as a 50% contributory to e-commerce, probably the growth in India will be faster than what we have seen in the rest of the world. We have to still get to the inflection point, but I think doubling every year is base case.
Sanjeev, coming back to you, do we have the basic infrastructure ready? Of course, internet has got enough penetration and it is only growing, but that's just the platform. Apart from that, for this entire space to grow, of course, Renuka has invested in an enabler company. Are the enablers there? Is the infrastructure ready for the growth that we are expecting?
Well, I think the infrastructure has been improving. If you talk about 5 years ago or 7 years ago, where we are today, it's much, much better. Companies have found workarounds, whether it is cash on delivery, whether it is building their own delivery networks. I think specialized e-commerce delivery companies are coming up, such as Delivery, which multiples have invested in. Infrastructure in India will probably not move ahead of demand for it. It will probably lag a bit. I think in that way, in that sense, we are different from China. But I think ultimately infrastructure will come in. I think the government needs to clear the air on regulatory. I think e-commerce is usually capital consumptive and it requires risk capital, and most risk capital in India is accessed from foreign sources. There isn't enough Indian risk capital. Most venture capitalists, most PE funds get their money from overseas, and therefore I believe FDI should be permitted in e-commerce.
But Sanjeev, as the understanding goes that probably we are already there in a disguised manner. In fact, let me throw that question to Falguni. There has been a lot of controversy regarding this, that FDI is already present in the e-commerce space in a disguised manner. There have been various structures that have been formed. Marketplace model has been brought in where 100% FDI is allowed, though not directly into the company. How, if you wear the iBanker's hat and analyze the situation, how risky is it?
I found it to be quite risky. The whole marketplace structure with with basically, with the seller on the site, is there a nexus with the seller on the site? I don't know. So we chose a conservative route. We are domestically owned. I believe in inventory-led business. I think that right now, customer needs to be fulfilled, and there is a model with an inventory-led business. So Nykaa is currently based on an inventory-led business, and it's very much domestically owned. But I agree with the point Sanjeev's making, that this sector needs a lot of capital. There is a lot of need for inventory as well as marketing spend, and a lot of capital in India historically has been, risk capital has been foreign-led. So to that extent, if government can open it up, that would be the best. But it should be opened up in a very clean manner.
But Sanjeev, what I didn't bring about earlier is the competition which is hotting up in the sector. Amazon has come in, Alibaba is there in a small way. They don't want to really cut their profits over here, but if they want to at any point, then they can really grow at a scorching speed. How do you see the competition building up if FDI is opened completely, and how do you think the Indian companies like yourself would fare in that case?
Well, look, we will also, first of all, we are not in e-commerce, so we don't have any such restrictions. But those who are in e-commerce, and there are very many Indian-owned companies who are in e-commerce, and they find that, look, if they are up against a model where people are getting in foreign investment in the marketplace model, but they're not able to access capital, they are at a disadvantage. So actually, it hurts Indian businesses to not be able to raise foreign capital. And one must distinguish between strategic investments and financial investments. Right now, strategic players are coming in, and Indian companies, barring a few who are working on the marketplace model, are unable to raise capital. So the Indian company is by and large disadvantaged.
But let me go to then Renuka on that one. Renuka, how about the competition overall? Yes, one is from the foreign companies. What about from the brick and mortar companies in e-com?
So the system will settle down, and we have to be patient with a very clear focus that we should not take any action which will unnecessarily delay progress. I think so far no such action has been taken, and I would sincerely hope that there is nothing done which would delay progress.
All right, we'll slip into a short breather and we will discuss what could be the risky points in the e-commerce space, and going forward, what could be the challenges as well as concerns in e-com. Stay tuned for all that. We have with us Sanjeev, Falguni as well as Renuka. And Sanjeev, at this point, what are the big challenges that you see in your side of the business?
Well, I think there are opportunities and challenges. I think mobile is a huge opportunity. It's also a challenge. The challenge of the small screen is very different from the laptop screen and the and the desktop screen. The app is a different animal. We could use this as an opportunity to grow tremendously, or somebody could come and disrupt us. Depends on how we handle it. I think as mobile grows, you're going to reach populations which perhaps do not know English. Because beyond the first 150 to 200 million people in India, English becomes a challenge. And we are largely running English language sites. Most sites have been built for the big screen. What do you deal with? How do you deal with a local language challenge? I think competition remains a challenge. I think talent is a challenge. I think for some companies, access to capital is a challenge. So these are big challenges facing the industry. But it's par for the course. All growth industries face challenges, and it's fine.
My question is that there has been a lot of controversy surrounding the discounts that have been on offer in the e-commerce space. How long before we start concentrating on the profits and do away with the discounts, or is that something that will not happen in any near future?
I think so long as there is a large amount of capital available for funding this kind of top-line growth that these companies have been seeing, you will not see discounts rationalizing anytime soon. So it's about access to capital and growth. So if growth slows down, I think people will become more rational. If access to capital is reduced, I think people will become more rational out of necessity.
So what is it doing, the excess capital that is being available, Falguni, in this sector? It is also spoiling the entrepreneurs to keep pumping in cash and to keep giving huge discounts to capture the market share at this point. If you look at it from the point of view of an entrepreneur and also an iBanker, how long can this model sustain?
No, the model, I think if you're going to acquire a customer that doesn't bring you any incremental margin, I think that's a very wrong way of doing business. So while I completely agree that there is a need to invest in brand building and in customer acquisition in the early stage of business, at some point one has to keep an eye on your incremental customer. Is he or she adding to some margin? I think that's a very wrong way of building a business, and it's not sustainable. And I pretty much at Nykaa, we don't want to play that game. We work with brands because brands also don't like it. They don't like too much discounting. They don't want to lose the value of their brand by excessive discounting.
What can spoil the party for the sector, Renuka, according to you?
I feel there should not be any changes or lack of clarity on anything to do with any fiscal levy on this sector. Not that I fear any of them at this point of time. Other than that, I think that companies should not let down their customers.
So, Falguni, I wanted to understand, we have seen enough M&A in this sector. How are you seeing the deal street go on? More fundraising would continue to happen, and if we are focusing so much on discounts, do you think a Flipkart, Myntra kind of mergers are on the anvil?
See, the large horizontal players want to offer their customers the whole range, and they will always be hungry for acquisitions. It was the same with Amazon in the US, and so is Flipkart trying to do that, trying to complete their bouquet of offering to their customers. That type of horizontal space is available to only very few players, and there are few in every country, and they will try to do consolidation. So there could be opportunistic mergers also between two similar categories like fashion with beauty sometimes, because they can sell both to both the customers, right? It goes well together. So I think there could be opportunistic mergers as well as acquisitions in this industry, like banks. Banks have always seen acquisitions. I think this industry is also amenable to that.
What do you think, Sanjeev, right now? Do you think that there are going to be more mergers for the benefit of both the companies? Or do you think that if Amazon comes with deep pockets and is ready to buy some of the local companies, then that's also something that the Indian entrepreneurs won't be wary of?
So this is in the realm of speculation, but I think the mergers we have seen in the past, barring one or two exceptions, have largely been mergers out of distress, where investors didn't want to write down an investment, so they thought they'd merge two of their companies because that's a stock swap and you can put in any valuation and not declare. I'm not sure how much value those mergers have added to the companies. I think the Flipkart Myntra merger is an exception. Other than that, I would say most mergers are mergers out of necessity rather than mergers that add value in the past.
All right, we'll see how the deal flow goes, but I'll give the last word to Renuka, because after customers in this particular sector, investors are the king right now. And so Renuka, you are raising huge amount of cash, $650 million, which would come online in the next financial year. Are your funds now focused towards the frontline e-commerce as well? What will be your style of investment?
From just a size perspective, I think we'll be moving up. Our transactions will be more in the $50 million range, and with an ability to do $100 million transactions by ourselves. From a investing strategy perspective, will frontline companies be in our radar? Yes, it would be, but it will have to compete with a whole host of other strategies. For us, I won't say that I have carved out 10 or 20% of the fund just to invest in e-commerce. But we do carve out 10% of our fund for making investments into what we call as emerging sectors, and e-commerce would be certainly one of them.
All right, ladies and gentlemen, we'll leave it there. So the consensus is that while the momentum continues, those irresistible discounts are not irreversible, and same goes for the valuations as well. But for now, the dream run will continue for some time in the e-commerce space. Thanks so much for joining us, all of you, Sanjeev, Falguni, as well as Renuka, and thanks so much to our viewers for joining us on Dealmakers.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.